Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and strategies. Hello, I'm Michael Bull. Thanks for being with us today. Well, we have a great subject today. We're going to talk about retail and retail real estate. We have some great guests when we cover a lot of aspects of retail and retail real estate. My first guest is Jim Costello. He's Senior Vice President with Real Capital Analytics, and he's joining us on Skype. Jim, thanks for being with us.
Thanks for having me.
Well, we appreciate you being on. And so tell us about retail property sales. It seems like it's been kind of a hot sector, even though some people seem to be a little nervous about it. There's a lot of properties doing well. What do you see for sales volume?
Yeah, there's some mixed signals in the market. You look at the trends in deal volume sort of on a year-over-year basis. And by mid-year, when all our final numbers are in, we think we may be anywhere from 20 to 25% lower than we saw in the first half of 2015. So you see that kind of decline, concerned. At the same time, average monthly deal volume through May of this year totaled $6.1 billion. That's an elevated level. If you look at every month since 2000, we've averaged around $3 billion per month. So in some respects, what we see here is just a bit of a pullback from an unusual situation in 2015, but still an elevated level of activity.
Okay, so it's still a very healthy volume of sales, which I guess you would expect with kind of the opportunities in retail and these low interest rates, right?
Yeah, 2015, part of the story there was that you had these mega deals, a lot of portfolio and entity level sales. Those happened easily in part because of the low interest rates, easy finance environment. And as that started to evolve late into 2015, with some uncertainty in the CMBS market, a little more challenging to finance bigger transactions, that stuff pulled back a bit. The sale of individual buildings, where an investor is underwriting one building at a time and based on the quality of the tenants and the cash flow of that one building, transaction trends aren't off as much there. Again, final mid-year 2016 numbers aren't ready yet, but we think we'll be down anywhere from 15 to 20% from a year earlier on that single asset sale stuff. So it's less severe of a pullback there.
And you mentioned lenders being a little more cautious than they have in the most recent years. So what are you sensing there? What are you guys seeing? Are lenders pulling back loan-to-value ratios? Are they being a little more picky?
It's a bit of a mix. There are some lenders that are being more aggressive. There are some lenders that are pulling back. There were comments by the Comptroller of the Currency yesterday talking about the local and regional banks that they regulate, expressing some concerns about the changes in underwriting standards by those local and regional banks. Not on the things like LTV, but more about other covenants in the loans and maybe take on a little bit of construction lending that may not be appropriate for some of these banks at this stage in the cycle. So they're a little bit worried on that side about some of the aggression of those local banks. But then the CMBS market on the other extreme, with the new changes in regulatory burdens, some uncertainty in how those are going to be implemented, the CMBS lenders have pulled back except for some of the highest quality stuff. And so you've got a little bit of a mix in that. And so you've seen a bit of a changing landscape this year for who's doing a lot of lending. CMBS had been on a tear in the last couple of years in terms of getting back to where we were, taking advantage of the economies of scale that these lenders had. But so far this year, CMBS lending is down.
Right. And, and the financing pullback will always impact values, right, and sales volume and cap rates. We're talking with Jim Costello with Real Capital Analytics about retail property investment sales. And so how is that impacting cap rates?
So far it hasn't. Eventually it might. we saw a bit of an increase in mortgage rates early in 2016 in response to the shocks in the CMBS markets, where lending rates went up. But cap rates hadn't changed yet. So, in part, you get an adjustment there in terms of lower deal volume. Some of the deals that may not have made sense at the prevailing cap rates probably just didn't happen. That's another reason why deal volume's down. It's not as though the current owners of assets are being forced to sell. If they can't get the pricing that they want, they'll just sit on the sidelines for now. So that's one of the challenges that we have here. So when things do sell, it's still at record low cap rates. When we look at those, we're total retail for mid-year 2016 is probably going to be around 6.3% nationally, and that's a record low on retail cap rates.
Okay, and that's basically retail properties over $5 million, all classes across the U.S.?
2.5 million and up.
2.5 million and up, okay.
So, yeah. So, and there's all kinds of variation within there. You look at, the 6 major markets in the United States, the average in these cities, the priciest cities, you're on average around 5.5%. And even within these cities, so the urban high street locations are going to post even lower cap rates. But some of the average cap rates that are kind of the highest are kind of the strip center retail, either anchored or unanchored. You're closer to 7% nationally there. Those are assets where the economic justification to be in some of those is not what it was 10, even 5 years ago, given challenges from the internet. But then the stuff where there's sort of a day in, day out need or some experiential benefit for that asset, that would be, say, grocery anchored retail or maybe lifestyle centers. Their cap rates nationally are closer to 6.5%.
Right, and our listeners are really commercial real estate people, right? They understand that cap rates are going to vary maybe on a property across the street from another one that's a similar class. But one of the things I want to ask you while I have you here is you guys at RC Analytics track all property types all across the country. So are you seeing more foreign investment yet into the U.S.? You have the Brexit situation, you have FERPTA changes and the tax situations for these investors. So is it impacting the market yet?
It's too early for it to impact the U.S. market. It was only a couple weeks ago when we had the Brexit move. We've seen some movements in the UK in terms of some of the open-end funds starting to mark down the value of their assets to shut down their redemption queues. But other than that, there's not a lot of signaling in the marketplace in terms of transaction activity. This is not like going to buy a bushel of soybeans in Chicago, right? Right. It doesn't happen in an instant. It takes a while for price discovery in commercial real estate, and it's sometime into midsummer or late summer rather, we'll have a clearer picture there.
Right. Okay.
That said, before any of this Brexit stuff, the United States was still growing in importance as a destination for cross-border capital. If you look historically, the United States was not receiving as much of the capital that made that decision to go across the border, but they had steadily grown in the last few years, and it's such that we had been the top destination globally for cross-border investment in 2015. So you look at that sort of trend that's been happening, and you look at one of the safe harbor locations, London, suddenly not looking so great as a location anymore. I would not be surprised if we saw an additional influx of foreign capital throughout the rest of 2016. It can feel hard to think of that sometimes when you're sitting here in the United States, because you look at all the problems we've got in terms of some challenges in the job market, some social turmoil, political turmoil, but this is still one of the best, safest, most productive parts of the world. And for all the challenges we have here, there's many more opportunities, and other global locations. The investors really realize that.
Yeah, well said. Well, Jim, thanks for joining us today. We appreciate you being on the show.
No problem. Thank you.
And stay tuned. We'll have more on retail and retail real estate, including some tips for retailers and landlords. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, Asset and Occupancy Solutions. Xceligent, building data everywhere. Valuate, easily share what-if analysis with colleagues online. And First Service Solutions, your CMBS borrower advocate. For more information on how these businesses may be of service to you, visit creshow.com.